The city of Brisbane stretches across the Moreton Bay floodplain, with its northern edges reaching Caboolture and its southern borders touching Beenleigh, while to the west it extends as far as Ipswich. In 2023, Brisbane's metropolitan population stands at 2.5 million, a remarkable shift from 1950, for example, when the city was home to only 441,000 residents. The term affordability had long been the rallying cry in property investment magazines and on the lips of property analysts, hinting at an imminent boom that in most areas never really materialised. However, in 2020, Brisbane and Queensland found themselves in the same situation as the rest of the nation, as reduced mortgage rates stimulated significant expansion of the potential buyer pool, coinciding with a still ongoing supply shortage. But now, at the tail end of 2023, what is around the corner for the Brisbane property market? Is there a second boom on the horizon? In this episode, we're going to show you where the Brisbane property market went from 2020 to 2023, explain exactly where it's at now, the three key growth drivers that will shape Brisbane in 2024 and beyond, and both a warning and prediction to those considering investing in Brisbane. If that sounds of interest to you, smash the like and subscribe button and keep watching. Should you invest in Brisbane? Astute property investors know that there are markets within markets. There is no one Brisbane property market. Brisbane itself is geographically often broken down into the following areas: the CBD, inner circle, outer circle, and the greater Brisbane area. But there's no denying Brisbane was overall one of the strongest property markets during the boom of 2020 to 2021. In 2021, Brisbane witnessed its most substantial annual rise in house prices in 13 years, propelled by an insatiable demand for real estate stemming from the continuing impact of the COVID-19 pandemic. Brisbane house prices increased 41.8% from the COVID trough to its peak in late May 2022. Even after its peak, Brisbane's housing market demonstrated strong resilience in the first half of 2022, while other parts of Australia waned and played the wait-and-see game with interest rate changes. But in June 2022, the naysayers had their day. The growth stopped and actually experienced an 11% decrease from their peak in the economic cycle, only to rebound once again in February 2023 and achieve 7 consecutive months of increasing median property prices, confirming that it's undeniably entered the recovery phase of the property cycle. Here are the latest stats from CoreLogic on Brisbane house prices. We can clearly see in the chart the recovery cycle of Brisbane has well and truly begun. But in order to forecast what will occur in the balance of 2023 and beyond, let's take a look at the three biggest demand drivers for the Brisbane property market to show you whether Brisbane will be one of the strongest housing markets in 2024 or not. The three biggest demand drivers for the Brisbane property market. Growth driver 1, demand from internal and external migration. Affordability, lifestyle, and a strong economy will see Queensland gain the most residents from other states in the coming years, particularly northwards from Victoria and New South Wales. These former southerners are simply going to get more value for their money in Brisbane compared to Sydney and Melbourne. And in far more ways than one, Brisbane's median house value alone is sitting at just 68.8% of Sydney's. Even when it comes to stamp duty, Queensland has the cheapest stamp duty of the nation. Affordable house values remain low relative to Sydney and Melbourne, and the fact is, the Queensland lifestyle and Brisbane's economy will continue to attract both interstate and overseas migration. Brisbane's economy is growing and diverse. The top industries include finance, healthcare, and education, which is what you want to see, as these types of industries in particular attract people to the area for work and business opportunities. Growth driver 2, Brisbane's rental yields and rental market crisis. In years gone by, 3% vacancy rates was the traditionally accepted representation of a balanced market. But the Brisbane rental market, like many others, is in utter crisis. With a vacancy rate of 1% and under for over a year, unless unemployment rises, unless we see job advertisements skyrocket and construction efforts pull off a miracle and boost supply, there's just no way property prices are going to decline substantially. Take a look at this CoreLogic chart of suburbs with positive and negative cash flows in capital cities. 5.7% of Brisbane suburbs still have cash flow positive properties, compared to Sydney 0% and Melbourne 0%, which makes it extremely attractive to investors, especially when they want to keep their lending options open, keeping their serviceability high. Growth driver 3, Brisbane's infrastructure. While the hosting of the 2032 Olympics will put Brisbane on the map and the world stage, let's look at the major infrastructure projects that will shape the city moving forward. The $5.4 billion Cross River Rail, the $2.5 billion Brisbane Live Entertainment Complex, the $2.7 billion Gabba redevelopment, the $1.2 billion Brisbane Metro, which will be an important part of Brisbane's larger transportation network, which will connect the city to the suburbs, and the $3.6 billion Queen's Wharf development, just to name a few. You can debate at what stages different types of infrastructure are beneficial to an area's property market. But there's no denying the right infrastructure spending can be one of the biggest catalysts for transforming local economies and pushing property prices upwards. The sheer diversity of construction jobs, transport infrastructure implementation, new entertainment establishments, and entertainment upgrades all run in billions of dollars. Brisbane's economy and job landscape are guaranteed to benefit from this. But here's the warning. Brisbane has witnessed a distinct outperformance of house values relative to units. In fact, it's the biggest it's ever been. Some commentators will tell you it's a good thing as buyers will be forced to buy units due to affordability, but you'll find 9 out of 10 times those who say that have a vested interest in the situation. When you buy an apartment, you're buying the problem. You're literally buying supply. The potential dangers are huge. There is nothing stopping another 500 apartment story complex going up next door to you, and there's no end for the ever increasing ongoing costs that come with owning an apartment. It's just not worth the risk. So, what's my forecast? To me, the picture is clear. Coming into the end of 2023, we will continue to see a rise in the values comfortably, ending up at around the 6 to 8% mark. But in my eyes, the Brisbane plays to get in now. Enjoy the next short 2 to 4 year growth cycle, and then again join the long-term play. I forecast rises. Not a rise like we've seen previously, but a steady rise due to infrastructure spending, migration, attractive yields, and ongoing supply shortage in the next 2 to 4 years, followed by steady growth, which could see over a 10-year period up to 25 to 30%, which will see the rental yield subside as we have seen in the two big brother cities. But more importantly, you need to know all your options. That's why I suggest you watch this video and continue your property investing literacy. Enjoy the video.